You sit there, eyes locked on the chart. The candles move slowly, rhythmically, and inside your mind, a whisper, I know where this is going. That is the moment you lose your edge. Every time you believe you know what comes next, you stop seeing what's real. You stop observing the market and start defending your belief. You stop responding and start predicting. You trade not what you see, but what you want to see. And that's how clarity disappears. The more you try to be certain, the more uncertain you actually become. Because markets don't reward prediction. They reward awareness. Mark Douglas said it best. You don't need to know what's going to happen next to make money. It sounds simple, but most traders never truly grasp it because prediction feels like control, and control feels safe. Yet the market doesn't care about safety. It doesn't care about your need to be right. It only reflects what's inside you. I remember the first time that illusion broke for me. I'd been certain, absolutely certain, about the next move. The setup looked perfect. The risk felt small. I believed I knew, until one candle destroyed the illusion. Not because I lost money, but because I realized I couldn't accept being wrong. That was the moment it hit me. The market didn't betray me. It simply showed me how attached I was to the idea of knowing. The illusion of control is quiet. It hides behind analysis, logic, and confidence. It makes you believe that more data equals more certainty. But certainty is a mirage. The more you chase it, the more chaos you create within yourself. Because when you attach emotion to outcome, you give away your clarity. The truth is, you can't control the next candle, the next tick, or what millions of traders will do. But you can control this moment, your response, your calm. When you let go of needing to be right, you begin to see with new eyes. You stop forcing the market to make sense and start flowing with it. The market doesn't demand perfection, only neutrality. And in that neutrality lies freedom. So take a breath. Look at that screen again. It's not chaos. It's a mirror. Every emotion reflected in every move. Every belief tested with every trade. The market isn't here to punish you. It's here to show you where you're still not free. When you see that, you no longer crave to know. You crave to understand. You stop trying to control uncertainty and start finding calm inside it. Because consistency doesn't come from prediction. It comes from acceptance. So if knowing doesn't make you win, what does? At first, it feels amazing. You catch a few trades in a row. Everything clicks. Every move makes sense. You feel aligned with the market, almost untouchable. You tell yourself, I finally get it. But what you don't see is that in that exact moment, the trap begins. Because after a few wins, you stop observing the market. You start observing yourself. You begin to measure your worth by being right. And when that happens, you're no longer trading probabilities. You're trading your ego. I remember that phase too well. It starts with confidence, then turns into certainty, and certainty slowly becomes blindness. 1 week, I doubled my account. Every chart I touched turned green. Every entry perfect. Every exit precise. I thought, this is it. I've mastered the game. But the market has a way of humbling those who need to be right. The next week, the same patterns appeared. But this time, they failed. And I didn't see it. I couldn't. Because I wasn't looking at the chart anymore. I was looking for proof that I was still right. That's when everything collapsed. Not because the market changed, but because I did. Mark Douglas said, consistency is a state of mind. And he was right. You can't achieve consistent results when your identity swings with every win and loss. Because the moment your self-worth depends on being right, every trade becomes emotional. Every candle becomes a threat. Every small loss feels personal, as if the market is judging you. But the market doesn't care. It's neutral. It reflects your beliefs, not your value. This is where the real trap lies. After a few wins, the brain creates an association. prediction equals reward. It releases dopamine every time you guess correctly. And when that happens, you're no longer a trader. You're a gambler seeking validation. It's not the money that hooks you. It's the feeling of being right. That's why so many traders spiral. They chase that feeling again and again until the market finally reminds them who's really in control. There's a moment. The chart moves against you and you freeze. You can't accept it. You add more. You double down. Because your mind whispers, it has to come back. But it doesn't. Not because the market is cruel, but because it's random. That's the paradox of trading. You can do everything right and still lose. You can make mistakes and still win. The outcome of one trade means nothing, unless your mind turns it into something. Every loss feels personal, only when you need to be right. When you stop needing that, a loss becomes just another data point. Feedback, information, nothing more, nothing less. That's how professionals stay calm. They don't attach emotion to each outcome. They've trained themselves to see trading as a process, not a verdict. They understand that being wrong is not failure. It's probability at work. Amateurs react. They predict. They fight. They hope. Professionals observe. They adapt. They adjust. They accept. It's not that they don't care about winning. They just don't make it personal. Because the moment trading becomes about ego, clarity disappears. I learned this lesson the hard way. After that losing streak, I sat in silence for hours. No charts, no trades, just quiet. And for the first time, I realized it wasn't the market I was angry at. It was myself, for believing I needed to know what came next, to feel safe. That realization changed everything. I stopped chasing the comfort of certainty. I stopped trying to predict every move. And instead, I started asking a different question. What if my job isn't to know, but to manage what I don't know? That's when trading became lighter, calmer, simpler. Because I understood something most never do. The market rewards those who can stay objective, when everything inside them wants to be right. So, if predicting fails, how do the pros still win? There's a place on earth where people lose millions every night, and yet one side always wins. The casino. Think about it. Casinos don't need to know who wins next. They don't predict which player will hit the jackpot. They don't try to guess which spin, which hand, which card will come next. They don't care. Because they understand something most traders never do. They have the edge. Every game inside that casino is built with a small mathematical advantage. 2% here, 3% there. Tiny, almost invisible. But repeat that edge thousands of times, and the result is inevitable. The house always wins. Not because it knows, but because it plays within probabilities. Now, compare that to how most traders think. They win a few trades, feel invincible, and start believing they've cracked the code. They start predicting, not playing, chasing certainty instead of protecting the edge. Mark Douglas said it clearly in Trading in the Zone. Thinking in probabilities means accepting that you don't need to know what's going to happen next to make money. But most traders don't want to accept that. They want to feel sure. They want to know. That's why they keep losing. Because when you need to know, you give up your edge for emotion. You trade for validation, not execution. You start fighting uncertainty, when in reality, uncertainty is where the game is played. I learned this lesson the hard way. Years ago, I built what I thought was the perfect strategy. I back-tested it for months. It worked beautifully. Until I brought my ego to the table. At first, it was pure execution. Clear rules, fixed risk, steady process. Then came a few wins. Then confidence. Then pride. And that's when I stopped being the house and became the player. Because I started to think I knew. I would override signals, move stop losses, double down, and each time I did, I gave away my edge, one decision at a time. The market didn't punish me. It simply reminded me, probability doesn't care about your feelings. The irony is, Most traders already have an edge. They just can't see it because they expect it to work every time. They confuse edge with guarantee, but they're not the same. An edge means over many trades, you'll come out ahead. Not every trade. Just like the casino. One game might lose, 5 might lose, but in the long run, the math wins. The difference is, casinos understand variance. Traders fight it. So here's the truth. If you can't handle randomness, you can't stay consistent. Because trading isn't about predicting outcomes, it's about surviving sequences. When you focus on one trade, your emotions dominate. When you focus on the next 100 trades, your probabilities dominate. That's the shift that turns chaos into clarity. Let me put it simply. An amateur wants to be right. A professional wants to be profitable. The amateur celebrates wins. The professional celebrates discipline. The amateur sees one trade. The professional sees the next 1,000. That's the difference between gambling and mastery. And that's why the house always wins. Because the house doesn't care about outcomes, it cares about process. I used to believe trading was about predicting direction. Now I see. It's about aligning with probabilities. Every trade is just one spin, one card, one roll of the dice in an infinite game. And in that game, your job isn't to win every round. Your job is to stay in the game long enough for your edge to express itself. When you truly understand that, you stop needing to know. You start trusting your rules. You start accepting uncertainty, because uncertainty is what makes the edge possible. So here's the paradox. The more you accept randomness, the more predictable your results become. Because consistency doesn't come from controlling outcomes. It comes from controlling yourself. The casino knows this. Professional traders know this. Now, so do you. So what does it mean to think in probabilities? When you stop needing to be right, you start seeing clearly. Because in that moment, your mind becomes quiet enough to see the market as it truly is. Not good, not bad, just information. That's what it means. To think in probabilities. It's not a trick or a mindset hack. It's a way of being where emotion no longer clouds perception and neutrality becomes your edge. I once mentored a young trader named Ryan. Smart, disciplined, hungry to win, but completely trapped by his emotions. Every loss would crush him. Every win would inflate him. He wasn't trading the market. He was trading his mood. One day, I asked him to do something simple. Take 10 trades. I said, but make each one small. Risk so little that losing doesn't hurt. He looked confused. What's the point if the profits don't matter? That, I told him, is the point. For the first time, he traded without caring about the outcome. No rush, no fear, no hope, just execution. 10 trades later, he hadn't made a fortune. But his chart showed something far more valuable, consistency, because every decision came from clarity, not emotion. He began to see the pattern that had always been there, but his mind had been too noisy to notice. That's what Mark Douglas meant when he said, anything can happen. At first, it sounds terrifying. If anything can happen, then how can you ever feel safe? But when you truly accept it, it becomes liberating. Because if anything can happen, then you no longer expect one specific thing to happen. You stop attaching identity to every single trade. You stop trying to control what was never yours to control. And in that detachment, you finally become free. You don't need to know to make money. Think about that. The professionals you admire, the calm ones, the consistent ones, they operate from this truth. They understand that the market is infinite, but their edge is finite. They can't predict the next move, but they can manage the next decision. They don't fear uncertainty. They flow with it. Like water, they move around obstacles, not against them. They adapt. They wait. They act only when probability is in their favor. And when it isn't, they step aside. Without frustration, without shame. That's mastery. Not control, but cooperation with chaos. To think in probabilities, is to separate the outcome from the process. Each trade is independent. Each moment is unique. And when you embrace that uniqueness, you stop repeating your old mistakes because your mind no longer links this trade to the last one. You start seeing what is, not what you fear it might be. That's what Douglas called the now moment. You're not haunted by the last loss, and you're not obsessed with the next win. You are present, fully available to the opportunity right in front of you. That's where the zone lives. Not in strategy, not in luck, but in presence. There's a structure to this mindset, and it begins before you ever enter a trade. Step 1. Define your risk. Decide how much you're willing to lose before you even click the button. Because when risk is predefined, fear has no leverage over you. Step 2. Execute without expectation. Do what your plan tells you, not what your emotions whisper. Step 3. Detach from the result. Win or lose, don't assign meaning to a single outcome. It's one data point in a much larger sequence. Step 4. Review without judgment. Ask, did I follow my process? Not, was I right? Step 5. Repeat. Because mastery isn't built in a day. It's built in repetition without emotional interference. This is what the disciplined trader called steps to success. Each one dismantles fear until trading becomes as natural as breathing. The more you train your mind to think this way, the less chaos you experience. Not because the market changes, but because your perception does. You begin to see opportunity where others see threat. You start flowing with uncertainty, not fighting against it. You start to understand that your real job isn't to predict, but to respond. Imagine being like water. Water doesn't resist. It doesn't argue with the rock in its path. It simply finds another way around it. When you think in probabilities, you become that. Fluid, adaptable, patient. You stop forcing trades to fit your belief, and instead, you allow the market to reveal its own truth. Because when you let go of control, you stop reacting and start observing. And in that observation, you find peace. Ryan came back months later, still trading small, still steady, he's still calm. He smiled and said, I finally understand. I don't trade to be right anymore. I trade to be consistent. I smiled back. Because that's when you know you're no longer chasing the market. You're walking beside it. And when you finally let go of the need to control, something shifts. The room looks the same. The screen glows the same. The market moves up, down, sideways, just like it always has. But something is different. Your breathing is slower. Your eyes no longer chase the candles. Your mind no longer argues with the chart. You've stopped needing to predict. You've stopped needing to know. And in that stillness, you finally understand what this was all about. You didn't change the market. You changed how you see it. You stopped chasing certainty and found peace inside uncertainty. You stopped fighting chaos and discovered clarity within it. Because the market was never your enemy. It was your mirror, showing you every fear you refused to face, every belief you clung to, every illusion you tried to protect. When those fell away, so did the tension. Mark Douglas once said, you can't rely on the market to make you consistently successful, any more than you can rely on the world to make you consistently happy. That truth stings at first, but it also frees you, because consistency isn't control, it's acceptance. Acceptance that anything can happen. Acceptance that your edge is all you ever need. Acceptance that uncertainty isn't a threat. It's the very condition that allows opportunity to exist. Now you trade differently. You don't measure success by wins or losses, but by how calm you remain while facing both. You take each trade, define your risk, accept the outcome. No anger, no rush, no pride, no fear, just presence. You're no longer the person who stares at the chart, trying to force meaning into randomness. You're the one who can sit still in front of it and see it for what it is, pure information. You used to think the market was chaos. Now you see It was always neutral. The chaos was inside you. And when that storm finally quieted, so did everything else. That's the paradox. Nothing outside changed, but everything inside did. So, before we close, take a moment. Look at the screen. Then, look within. Not to judge, not to fix, just to understand. Because trading was never about conquering the market. It was about understanding yourself, your patience, your fears, your beliefs, and your ability to stay calm in the face of what you cannot control. If this made you pause, take that pause with you. It might be the beginning of real consistency. This isn't financial advice. It's mental awareness. The market didn't change, you did.